Guys, I'm playing my day late dollar short card today. I'm not usually here right at the wire. Um, Good morning. Excited to see you guys in here. Um, Wayne is out till 10:15. One of the things you guys will notice is Wayne dropped pictures in the room and said, "Hey, I'm out of here, buddy." That's okay, guys. If you need a little feedback, but you're not going to be here, drop your pictures. Let me know when you get back. We will talk about every picture posted in this room, and I'll give you everything I have on the chart reads. We're also going to just read live charts, guys, all day long. We're going to watch the S&P. We're going to watch crude oil. And we're going to talk about some very basic stuff. Before we even get to that point, though, going to check news. Today is Wednesday, the 25th of June. And at 10 a.m., Fed Chair Powell is expected to testify, which means at 10 a.m., that red box lets me know that the market has the potential to go nuts. It has the potential to spike, to reverse, to be too fast to trade. Crude oil is a sloth today. Victor, what this tells me is you guys are never happy because one day it's moving too fast and now it's too slow. It's like driving down the highway at 75, right? Everybody that passes you is an idiot and everybody slower than you is a moron. I think that's an old George Carlin bit. It's funny how that works, though, right? When it's really, really fast, we're like, I can't keep up with my chart reads. And then it slows down, and you're like, oh, I must be good at chart reads because I am bored out of my mind. It happens. It's cyclical, right? They have these little moments of giddy up, and they have these moments of pause. We wait for the giddy up. There is money to be made in volatility. Uh, that's a funny observation, though. Guys, at 10 a.m. and every morning I go to forexfactory.com/calendar and I'm just looking for news. I want to see what's going on in the world that might disrupt the patterns that I trade. So 10 a.m. is about it. If you're a crude oil trader, Victor, one of the reasons it may be going slow right now is because crude oil inventories come out at 10:30 a.m. and they're going to release the number of barrels in reserve, and they do this every Wednesday. And this is one of those things where even though it doesn't have a red box next to it, very often crude oil inventories not only create a big spike in the market, but they also get people kind of jockeying for position as crude oil gets ready to release that. And I believe we might be able to see that this morning. When you start to see your large charts kind of bouncing, can't follow through, fights between buyers and sellers, man, that's a crude oil inventories morning. Without a doubt. They're pushing to key areas, but they can't get a really definitive direction going. And remember, guys, if you're a trend trader, it takes a trend to really find what you're looking for. So this could be a byproduct, Victor. I don't presume to know, but I do know that inventories are coming out, and that could create the little challenge that we're looking at. So just a news check every morning, guys. It helps keep you in the driver's seat of knowing when things are going on. And as we go through, guys, and we take this educational room, and we're going to talk about patterns in the market, and we're going to look for advantages, and we're going to look for edges, if you will, to have an edge each and every time I take a trade. And we're going to do it, wrong picture, so let me minimize that. We're going to look a lot at these high probability trend trades this morning. And I want to tell you, I want to give you the warning, there are a tremendous amount of ways to find a way to be profitable with this software. Most of them revolve around having momentum and understanding whether or not a termination condition was present. So these are going to be really two of our biggest focuses today every time we look at a chart. So if I switch from crude oil to the S&P, the first thing I'm going to do is I'm going to identify the trend. We're going to talk about the momentum. And we're going to figure out whether or not we have a clear path. Because once you understand these two concepts, man, you're going to find a way. The first way for most users is a high probability trend trade. It's a trade that typically wins 70 to 80% of the time if you follow the rules. If you don't follow the rules, you can't really rely on that statistic. So that's what we're going to look at a lot today. And momentum is really a simple recipe, guys. It's really nothing more than a separation between triggers. On your large chart, if the background is green, it's going up. If it's red, it's going down. And hey, good morning, Junior. Good to see you, man. And all strong triggers is, guys, is it's a look. It's a separation between small and large triggers. When there's a gap between the two, everything's green going up. Guys, the odds are favorable for the market to continue up. When there's a gap between them, everything is going down, everything is red. The odds are favorable for the market to go down. So this is going to be the first thing that we look for every time we look at a chart, that advantage of momentum, because momentum pushes a market, guys, and momentum can break key areas, and momentum is what we're looking for to have that first advantage. And what you'll see is when there's separation, the market tends to accelerate, to really drive and even break key Fibonacci areas. But when that separation goes away, that's where we start to see those bigger retracements. And you'll see this a lot. You'll see where you can't get just the best look, but when you have it, there's a pretty good push. And the only bar that you need to look at is the first bar on the large chart. So right now on my large chart, this is crude oil. Does everybody see the separation between the small and the large? That's momentum. That's your momentum look. The easiest lesson that you'll ever get. But once you have momentum, the second piece of the equation and the second rule for a high probability trend trade is making sure that there's nothing in the way that could stop the market. And that is horizontal lines on a large chart. It's these yellow 1-to-1s that stopped and created a reversal here. It is divergence lows, it's divergence highs, which we see creating problems right now. It's Fibonacci support, it's Fibonacci resistance, guys. And we're going to use a recipe. Every time price gets to one of these areas, you're going to ask yourself, well, where are my triggers? Because my triggers are going to let me know how I should feel about that area. So how many triggers are past the area is the answer to everything. I love this picture. My brother put this together not long ago. So if none of the pictures get past the area, guys, just assume the area will hold. Assume that there's no way the market's going to continue in the direction, and do nothing, because your advantage is 100% out the window. If you get 2 triggers through, it does have the potential to break, but it's less likely to break. The potential is there. You can take an opportunity, but boy, you've got to be chock full of the rest of the advantages. And guys, once we start seeing 3 or more lines breaking through an area, when you get both small triggers and one of the large triggers breaking through an area, that's when the potential for a breakout goes up exponentially. So every time we look at a chart, we're going to say, all right, I reached one of those lines, and I've only got 2 triggers through. This is an area that doesn't really have what I need to feel good about trading into it. Does that make sense, everybody? And then we're just going to rinse and repeat throughout the day. This is an educational room, guys. So we're going to focus on the same concepts, the same ideas, the same looks all day long, because that's what day trading is. It's understanding that you have an edge, or that you have an advantage. So here we are again. This is the S&P, and you can see that the momentum is really nice. 2 triggers are through. 2 triggers are not. This isn't an area that I'm expecting to just absolutely smash through. I can say, well, yeah, the potential to break is there because of these trigger lines. But until I get 3 through, they may struggle to push up higher. And guys, we call this a 50-50 look. And when we talk about a 50-50 look, it means that only 2 triggers are through. It means that only the smalls are through and none of the large have made it yet. And this 50-50 look is a potential look. It's not a high probability trend trade look. So we look for other things. And I'm going to do it like this. Because my triggers haven't all cleared the area, I'm going to go back to that very basic recipe. I need momentum. I really want a clear path. And then, guys, I've got to define an entry. So the first thing I look for are these trigger lines. And we're going to ask ourselves every time we look at a chart, do I have strong triggers? And guys, every time you take a trade, I want you to write this on your chart. I want you to say, hey, I did have strong triggers. Or I want you to say, you know what? There was some weakness in those triggers. Just identify it. Because when you know what's good, you also know what's bad. And then I want you to talk about whether or not you have a clear path. And you're just going to use that trigger rule, guys. And you're going to say, I've only got 2 triggers through. Write it on your chart. Remind yourself what you're looking at. 2 through is potential, but not broken. It takes all 4 triggers to call it broken. So you're going to say, all right, I've got strength. I've got momentum, but my path isn't clear. And I'm literally going to X that out. I'm going to say, whoa, I'm fighting some stuff here. So what can I do? I can say, if I have the perfect entry spot, and guys, the perfect entry spot is hidden now behind a yellow box. The perfect entry for a trend trade is a pullback, I'm going to get it right eventually, to areas inside of these large and synthetic triggers. And guys, this 61.52.25, you have yellow 1-to-1s, and you have a mid band, and they're right at the bottom of these triggers. Guys, this is about the lowest risk entry you could ever take if you wanted to take a shot at the potential. You've got 2 out of your 3. We're going to call it a medium probability trade. And if you take this trade, you have to be very aware of the fib that hasn't broken yet. And you've got to be very aware of these divergences, because divergence is a loss of momentum. And every time one shows up on your small chart, you start to sacrifice some of that momentum. So 1 leaves you with momentum. 2 divergences typically leaves you with just and this is where these potential to break trades tend to fail more than they don't. So go back to advantages every time you take a trade. The recipe for the best of the best, for that trade that typically wins 70 to 80% of the time, is having the advantage of momentum with those strong triggers, having 4 triggers through the area that could have been problematic, but there is a recipe for when you can trade potential, and having that defined entry area, that pullback to an area inside of your large triggers on the small chart. Guys, that's your high probability. That's all 3. What we're going to do today is we're going to talk advantages a lot. And we're going to go back to and we're going to recite over and over, not only whether we have them, but the recipe to identify them. That's going to help you guys get to where you want to be. And we're going to say everything is great. And I'm going to say I'm going to place a trade because the rules are met. Remember, this is an educational room. This is not a trade calling room. When one of the advantages goes away, we're going to call it a medium probability trade. If 2 advantages go away, I don't know why you'd want to take a low probability trade, but some of you really do. But you control the entry, guys. You control your entry. You're the only person that can put you in the market. You're the only person that can take you out of the market. So knowing what's working for you and against you, guys, it helps you make decisions. Not only on whether you want to enter that trade, but also how aggressively you may need to manage it. And whatever advantage is missing, that's how you can insist on the other 2 to create a higher chance of success. So I'll give you guys this picture in the room. I think that's a good one. So when we look at the S&P live right now, I have momentum. I only have 2 triggers through the area, and I'm losing momentum on a small chart. And no matter what this market does next, I don't have enough of the advantages I need to feel great about taking a trade directly into a fib. I'm going to wait for it to push. I'm going to wait to get that 3rd trigger through and give myself a little more of an advantage. Look what your small chart is doing as your large chart is struggling to get through this key area. Again, this is the same area, this divergence high. What this divergence high means is right here, the buyers tried to go up and the sellers told them to get bent. They said, you know what? Absolutely not, buyers. We're going to rob you of your momentum, and we're going to put a line in the sand that is going to extend all the way until you reach it. And when you reach it, there's a really good chance we're going to unload contracts on you and stop your forward progress again. Guys, that's exactly what you're witnessing right now. The buyer's in control, even with momentum. They reach the line in the sand. Everyone in the room says, hey, where are my triggers? None of them are through. No trades into the area. We have to assume that the sellers have something up their sleeve. It's easier to just let it break. So that's going to be kind of what your day entails today, guys. I can talk incessantly. I can talk all day long. I prefer not to. My hope is that you guys post in the room, that you guys post your trades in the room. And what we're going to do today is we're going to learn those trigger line and those Fibonacci rules. We're going to talk about momentum. We're going to embrace a clear path. We're going to define trend trade entries. And as we go through the hours, we'll look at momentum entries, and maybe we'll even talk about those chili dog entries that a lot of you are taking. Everybody in the room has the ability to simulate. I've got a whopping 24 people in this room right now. So 24 of you have opportunities to show me what you're doing in the market. 24 of you have the opportunity to define the momentum on your chart, to talk about your termination conditions, and to show me your entries, guys. And if you go through and you give me this information and you show me what you're doing, what I'm going to do is I'm going to give you a private session live in front of everybody. And we're going to talk about your chart read and make sure that it's accurate. We're going to talk about your entry and make sure that it was the lowest risk possible. We'll even talk about your exits and see if there's a way to work out your management plan a little bit together. But that is the first step in really getting to where you want to be, guys. Post in this room. Change my dialogue to the dialogue that you need. And we will keep it simple. We're going to look at these 3 rules. And I'm going to give you guys goodies throughout the day. The first thing I'm going to give you is really kind of the roadmap for what I'm going to be doing, guys. And this is the KISS plan. We're going to be defining our entries. And we can talk a little bit about management if you guys want to talk about management. And we're going to do it for the high probability trend trade. And then if you go to the second page, it's that 50-50. That area is not quite broken. 3 of the 4 triggers through the area trade. So I'm going to drop this in, guys. This is the KISS plan. This is designed to optimize your chances of success using only a couple higher probability trades, 1 medium probability trade. And I'm also going to give you this one. Guys, this is a checklist. I can't stress the importance of a checklist, guys. I keep a checklist on my desktop when I trade every day because it lets me know when my rules are met. This is what I talk through every time I look for a trade. This is what we're going to talk through today. Every time we look for a trade, we're going to ask, is the market coming from a strong top or bottom? And a strong top or bottom, let's define it just for grins. A strong top or bottom means that we had one of those termination conditions, that absolutely none of the triggers broke through it, and it reverses the market. And strong tops and bottoms happen all day long. Terminations that reverse the market are strong tops and bottoms. And while it's not a rule for the high probability trend trade, when you're coming from a strong top or bottom, those potential to break trades are more likely to work, and you're going to find yourself looking for that first advantage before you take one of those medium probability trades. It's going to ask you to look for the momentum. It's going to have you counting triggers at every line that you reach. And guys, it's going to define that entry, that area inside of favorable large triggers. So when we talk about areas inside of favorable large triggers, when we're looking for these entries, guys, there's a recipe for finding the best of the best. Here we go. When the large chart has all that momentum, when the large chart has nothing in the way, or at least that 3 trigger potential to break, we're going to look for pullbacks on the small chart, on the fast chart. And it begins with a reversal bar. And you can define with some pretty awesome accuracy where this retracement is most likely to go using large and synthetic triggers, because price returns to large triggers. It's a moving average thing. But triggers tend to not be real bouncy. Price can blow right through them. So you're looking for areas, fibs, midbands, and yellow 1-to-1s inside of those triggers, guys. So when you're defining entries, you're saying, okay, I need a reversal bar, I need a pullback, and I'm going to buy right in an area inside of triggers. Or if you're going the other direction, I need a reversal bar, I need that pullback, and I'm going to sell right in an area inside of those triggers, guys. And that is a trend trade entry. That's the first entry that we talk about each and every day. And one of the things that you're going to find is that great entries create very manageable trades. 2 triggers through. It creates a bounce. There's that darn loss of momentum again. And look at what the market is doing. Guys, these are patterns. These are patterns that repeat themselves daily. These are patterns that are repeatable. These are patterns that you can study. These are patterns that you can go back historically. And if I circle this tail, just talking about a pattern, it pulls right back to a midband, right inside of triggers, and that's where the bounce takes it up until that divergence kills the forward progress. So that is your entry pattern. And guys, it happens on every time frame, every market. 2 triggers through, pulls right back to the area inside of triggers, and now with only 2 triggers through, these divergences appear to be killing the party. There are opportunities even in failed trades with great entries. So that's what we're going to do today, guys. We're going to do it on NinjaTrader. You need a market flow chart, so check it out, Victor. Whoops. If you go to the Nexgen website, and I'll give you the link, and you go to resources and trading guides, this is the instructions. Whether it is TradingView indicators, whether it is NinjaTrader indicators, and right down here there's a whole section dedicated to market flow, high volume area trades, momentum trades, and some additional market flow techniques. These are good. Victor, you don't need a market flow chart to take these trend trades, but you do need them for that HVA trade. But let me give you an even better. Let me search. I'm going to give you this video. This is John Novak's masterclass that he taught for a while. And it works out for you guys. A great plan, how to use termination conditions, Victor. And then from those termination conditions, using your market flow chart to take the first opportunity to go long or short. That's an awesome, awesome watch for you guys trying to get into market flow a little bit. I'm a huge fan of the market flow chart. I use it on my TradingView charts all day long. And you'll see these high volume areas, these areas of green, and then there's magenta areas, and there's a plan for using them, guys. And even on market flow here, I'd like you guys to see this. The large chart has momentum. Everything says up, the momentum is strong, life is good. The market pulls right back to a mid-band, closes on the correct side of the small triggers, and that's your trend trade opportunity on TradingView, guys. And I was watching it with John Novak a couple times this morning. There's another one. When the large chart tells you it's time to look for an entry, there's your mid-band, close on the correct side of the triggers. It's an easy win. There's pulling back to your zone, close on the correct side of the triggers. A little more challenged win, but a win nonetheless. And the idea is that you can continually follow what the big chart tells you to do. And your small chart is just an entry chart. I took a picture, and I sent this to my brother because my brother is experienced, and he's an awesome chart reader. And while those of us that are new are saying, let's go long, let's go long, let's go long, let's go with that large chart, experienced traders are finding opportunities to get paid in those moves against the move. And you'll get to that point probably by reading your indicators. But this was a pretty good, that was the perfect trend trade. All up, clear skies, pull back to the mid-band, close on the correct side. For you TradingView users, that's the money trade. That's the easy trade. That's the highest probability trade. This is the one that reaches account goals quick. But it all starts on a big chart. S&P. Let me see if I can change those trigger lines real quick. I don't know why I have 2 of them. There we go. Smalls are above the large. The momentum is strong. Does everybody see it? I don't care what platform you're on. Momentum is momentum, guys. That is a strong trigger look. That is an uptrend. This is a visual that says, hey, don't get suckered into shorts. Wait for the pullback to the mid band. Close on the correct side. Guys, that is your trend trade, trading view people. As you get to the mid band, there is no close on the correct side. There is no trend trade. And now we're watching the small crowd fight it out. Just going to wait for it to get back in line with everything the big chart says. Here's your crude oil as they jockey for position. They hit a key area. It reversed the market. The strength was up. There may have been opportunities up, but then we hit the mid band. That's a VWAP. And sure enough, that's where the down starts, guys. So we're in a transition period here. The momentum is up, but there's stuff in the way. So you can't really fight momentum. You can't trade into areas. This is where you just pause and relax. Crude oil. Everything says down with strength. We hit one of those divergence lows and almost the one-to-ones. And look at the bounce it creates. Doesn't quite get you to your mid band, and that would have been the look for an entry, guys. And then XRP is going up. Go XRP. Got a crypto account. We're rooting for the best. Price pulls back to the mid band, HVA zone. Guys, look at that spike. That's a minute's worth of bar and a huge reaction right off of a mid band, right off of a zone, right off of an HVA with the large chart going up. So we're going to look at both charts, guys. We're going to look at TradingView a lot today. We're also going to look at Rinko, and notice that they're not going anywhere. There's this awesome phrase, decisions are made at key areas. Decisions are made. Who's making the decisions? The large crowd. Let me find my pictures here. One of the easiest ways to keep yourself on the right side of things, remember that your big chart is a slow chart. Your big chart is a very broad stroke of a brush, and we use it to determine the direction of the market, the momentum in the market, and the areas that can be problematic, guys. And I want you to think of your large chart as this big crowd. And they have money, and they have influence, and they make the market go up and down, and they create the spikes. And most importantly, they react at areas. When they hit Fibonacci resistance, they may exit a position. Sellers may take over and push it down when they hit divergence highs, when they hit divergence lows. So by trading with the large chart, what you're going to find is that the large chart typically wins more than it loses. Your entries on the small chart are using this group of people, these yahoos that will fight trend, these ne'er-do-wellers that will fight momentum, guys, and they create these little rifts, these little pushbacks. Your third rule for the high probability trend trade is designed to have you pinpoint right where their failure is most imminent. That becomes your entry for the highest probability trend trade. Right where their failure, when the rule is met, is most imminent, and that becomes your highest probability trend trade. Guys, your S&P is currently in a state of I don't know what to do, so maybe it's better to do nothing. Look at how price dissects the fibs. Guys, this is the fight between buyers and sellers. This is the fight between the two forces on the large crowd. You don't have to be a part of that fight. You can say to yourself, I'm cool sitting on my hands until my advantages go up. I'm all right not taking a trade until I have the advantages that I need. And what you're going to find is that 90% of your day, ladies and gentlemen, is waiting for advantages. There was your pattern again. 2 divergences, only 2 triggers through. And guys, look at what the market is doing. Rules are designed to keep you safe, to keep you out of problems. I'm on crude oil right now. Let me shut down and reload for you, Jen. There you go. Did that do it? Make sure that you're good. Awesome. You were stuck. It happens sometimes. All right, so this is crude oil. We're going to do a chart read, guys. This is how I do it every time. The first thing I ask is, what direction is the background telling me? Background's telling me that the market is more likely to go down than up because it's red. And now I'm looking for strong triggers. I'm looking for smalls below the large, but guys, I need the large down too. If we go back to that very basic odds favorable momentum picture, my colors have to match. My large triggers have to be wide. So in this moment, I don't quite have it. But I do have a clear path to get to Fibonacci support. 1 out of the 3 of my advantages are gone. I don't have momentum yet. I do have a clear path. And there is an area inside of triggers. Maybe some of you will find an opportunity to take that one. But this market hit Fibonacci support. So guys, look at your trigger lines. Every time you hit a line, I've got 2 small triggers above support. I've got 2 large triggers above support. I have 0 indication that this area has any desire to break. Does that make sense? Can you guys give me a Y if you're with me on that? Hit an area, count the triggers through. Price reaches support, absolutely no triggers through. My highest chance of success comes from doing absolutely nothing. My highest chance of success comes from not taking chances trading into areas, but rather waiting for the reaction. Let's see what they do. Let's see what the large crowd has in mind. Do they want it to go up? Do they want it to break through? Guys, I don't know. But my advantage is gone. This is brand new. And here we go. Now we've got 1, 2, 3 triggers through resistance. But guys, I've got 1, 2, 3 losses of momentum. So there's one time when your small chart will trump the large chart. And there's one time when the small chart will give you a termination condition. And let me show you exactly what it looks like on a small chart. I have pictures for everything, ladies and gentlemen. 3 divergences. This is your only small chart termination condition. 3 divergences in the same price range. Because what you're looking at is 3 losses of momentum. 3 times the sellers steal it from the buyers at a high, producing a magenta line. 3 times the buyers steal it from the sellers at a low. When you see 3 divergences in the same price range, you have to say to yourself, dag nabbit, I don't have a clear path. This is the only time where if I am working with momentum and there is absolutely nothing in the way, that is the only look that will keep me from taking that high probability trend trade. It's 3 divergences in the same price range. And it may terminate the trend. And guys, language becomes important when trading the market. You're going to see words like may, like could, like might, like potential. And what you'll see is that I try to avoid absolutes. Because trading is about a pattern, and the pattern produces an edge. And guys, when you talk about anything with the potential to win 70 to 80% of the time, you're also talking about something that has the potential to lose 20 to 30% of the time. That's a cost of doing business. But what we can do is we can identify factors designed to keep you out of problems. I hope that makes sense, guys. That's all day trading is. Had somebody the other day in the room, and one of the things that I would say every day is, guys, 90% of your day is reading indicators. 90% of your day is waiting for advantages. 90% of your day is doing nothing. And until we started doing this live, and he realized that over the course of 3 hours, we were active because the rules were met. I placed a trade because the rules were met 3 or 4 times in that 3 hours. He's like, wow, that just normalized the idea that it's okay to do nothing. Guys, this S&P market trades $174 billion a day on average. That's the money that's exchanged every day in the S&P. Let me show you a cool little something. It takes $400 a day. That's it. $400 a day to put yourself in a six-figure income based on your trading. The goal for trading is to make that money. The goal for trading is to find a way to get into the market, to get out of the market, to have an advantage, and to lose less than you win. So having these advantages, looking for momentum, counting the triggers, being cool, because look at this, 1, 2, 3, 4, and it pushes down way below those triggers where the market shouldn't go. It still may go up, but that's an avoidable loss. And that's exactly what your indicators told you. So now we're going to wait for everything to kind of get back in sync. We're going to wait for a clean break. We're going to let the market get away from this decision-making point. And why do we use the large chart advantages? Because inside of that one bar is all of this mess, guys. That small chart's just an entry chart. It's just a refinement chart. It's a fine-tuning chart when the advantages are over here. All right, I'm going to click on some of the pictures that you guys have posted. Since nobody seems to be posting right now, I'm going to drag it out and turn it into as many lessons as I possibly can. Paul was nice enough to get us going yesterday afternoon, and his chart chooses not to load, but we've got quite a few here, and I think that Paul is a big fan of the idea. My screen is still on Daily Goal. There we go. How's that? I did a little reboot. You guys got it? Good? Awesome. And guys, always tell me. If you can't hear me, tell me you can't hear me. If you can't see me, tell me you can't see me. If you tell me that you can't hear me, I will talk just a little bit of mess about you to the rest of the group, but then we'll find a way to get you back in. All right, Paul, let's see what we have here, brother. So I'm going to start on your big chart. And it's trading directly into a fib, but I'm not sure where the entry was. So I'm going to come to your smaller charts, and I'm going to see what you did here. So we're not there with momentum. You say last breath of momentum. That's like saying I don't have momentum, right? So we're missing one of the three. You didn't reach an area, and you pulled right back to these yellow 1-to-1s, which line up with a mid-band, a couple fibs, and you catch that market on the way down. So the momentum isn't outstanding, your path is clear, and you've got areas, but they're outside of triggers. So we're giving up 2 of the 3, and let me show you guys what Paul did that is so stinking smart. Paul said, you know what? I'm beyond the retracement zone, and I don't know which one of these lines is going to create a bounce. I don't know if it's going to be this fib, or this mid-band, or this fib, or this fib, or this fib. And Paul says, holy smokes, that's a lot of options. I need to be a little more specific. So what he does is says, when I get to a line, and the market breaks that halfway point of the previous bar, then I'll take an entry, because now it's going in the direction that I want it to go. Paul identifies blue Fibonacci support and says, what a great place to get paid. And guys, this is not a high probability trade. This is a trade in a downtrend. This is a trade losing momentum, but with nothing in the way. And this is Paul with the understanding of saying, hey, if price retraces to this area and all my triggers are below, this area could stop the market. I'll use that for an entry. Beautiful trade, Paul. Really nicely done. All right, the next trade. That is about the best momentum you could ever hope for. Look at the separation, guys. 1, 2, almost 3 triggers through the area. And Paul says, I missed my trend trade from the areas inside. So with all that momentum, I'm going to jump in on the way down. I don't think this qualifies as a high probability trend trade. So Wayne, we have changed the directive of the room. We are no longer doing an hour of 101. We're getting directly into your charts and live chart reads, and the entire day is based on live chart reads. Welcome to the next phase. And guys, my hope is that it's live chart reads, not only on Ninja, but we're also going to go back and forth between TradingView because I have a feeling this class is going to be more TradingView. Paul jumps in with momentum below the decision-making zone and carries it all the way down to Fibonacci. Another nice trade, Paul. And then we get into Problemville, Population Paul. Are you in here? Guys, I want you to see, and I wish that we could just bump this up a little bit. This is gonna do two things for us. The first thing is if you ask yourself the trend, you have to say up. It's green. But if you ask yourself momentum, you have to say no, the large triggers are still red and down. There is no momentum. And if you ask yourself clear path, you have to scream no. Because price reached this fib and all the triggers are below, and price reached this fib and all the triggers below, and only half of the small triggers are through this fib. And guys, there is a brick wall, an absolute brick wall of resistance that Paul's trying to get through, coming right now, Jen, without momentum, an absolute brick wall. And it's no surprise that even though he's jumping in on the small chart on the other side of trouble, the large chart never told him it had any potential to break. And sure enough, this is what we call an avoidable loser. And Paul's annotation is trying for early momentum, stopped out, retried for trend trades, stopped out again. This is why when I meet my daily goals, I quit or I go to sim. My main problem is it had not rolled long, no momentum, not clear. So in the moment, guys, this is what your brain is going to tell you. This is a great look. Look at those small triggers. We're going up. The market's not going down. Take a long trade. When you come back and look at your trades, talk to yourself about what may have gone wrong. Go back to those three core advantages, momentum, path, and entry. And what you're going to find is that you'll be able to tell yourself, I didn't have momentum. There wasn't a clear path. It's no wonder this trade failed. And this is an avoidable loss. Paul, awesome picture, great annotation. Odds favorable, clear path, perfect entry, easy money. There's your recipe. Odds favorable, clear path, perfect entry, easy money. Re-enter because absolutely nothing changes. Easy money a second time. This look right here, ladies and gentlemen, is the easiest trades you'll ever take. The trades with momentum, the trades with a clear path. Those are the ones that are going to set the tone for everything that you do. Wayne, your chart is a mess. Went long against strong triggers and got wiped out. Absolutely no surprise. Went short without momentum. Managed aggressively, good job with the potential to break. And then with momentum on the small chart, you just jump in and get paid. You were busy. And the only one I could say, man, wouldn't hurt to pump the brakes. Absolutely no reason to fight those triggers. No reason. That is a lot of strength, but nice recovery. Going back with the trend, you know it's only potential. Awesome management. And then look at that, 1, 2, 3 divergences, print in the same price range on an area that refuses to break. Wayne says, well, wait a minute. Everything's rolling and I've got momentum up. Let me get in on the right side of the triggers and ride that momentum up. Great job. And when Wayne says the right side of the triggers, let me show you what he's talking about. Because Wayne has been doing this for a while. Guys, if you have momentum on your small chart and price is over here, that market's going up. Wayne knows that. That's why he could capitalize on that small move within the move. Once you get a close on the other side of those triggers, that ride is over. And that's exactly what Wayne did here. He said, the breaking failed. 3 divergences confirm it. I've got momentum. Let me ride it up to trouble. Beautiful trade, Wayne. You are here, right? Odds favorable momentum, everything says up. Odds favorable momentum on a range chart. Odds favorable momentum on a small chart. Holy crap. Momentum 3 times, above trouble. Just take a snippet. Make $300 or $400. And then when your momentum goes away, GTFO. Wait for the next one. Great job, Wayne. Did this turn into a trend trade when that momentum went away? Because that's one of the common things. Nope, didn't work. Very often, guys, when those momentum trades fail, if the rules are met, it turns right into a trend trade. There's a great example. Momentum on every chart. When that momentum fails, pull back to the area inside of triggers. 3 triggers through the area from a strong bottom. Strong triggers. Getting in on the way up. Easy money. Wayne, putting on a clinic this morning, my friend. Really nicely done. And I'm glad that we could get you before you had to head out. Great job. Guys, this is what the room is. So 3 divergences, pushed it lower than those, right? And now everything is saying up again, guys. And now we have odds favorable momentum. All of my triggers are above resistance. It's behaving as support. And if that small crowd decides to fight, I've got an area inside of triggers. Goals met in less than an hour. How many trades did it take to make it? About 6? And Wayne, here's the best thing, is your goals would have been met in 45 minutes if you just wouldn't have fought those large chart triggers on the first one. That's that wake up, think you see something trade. I have momentum. My triggers are above resistance. It pulls right back to support inside of triggers. Guys, my retracement zone is the bottom of these triggers. I'll give it about 4 ticks, and we'll see what happens. Can you give me a Y if you see the momentum? Because that's where I start. We're counting triggers. 1, 2, 3, 4 triggers are above resistance. There was an area inside of triggers, another area inside of triggers. And guys, down here at 61.54.75, I define where the market should not go based on getting past the areas inside of triggers, getting past the area where the market is most likely to retrace. Once I get down here, ladies and gentlemen, there is no telling if, when, or where this market is going to stop. So the only thing I'm waiting on now, and we're going to use KISS plan management for this particular trade. We have followed the rules for entry. Whoops, momentum, path, entry. And now we're going to use the KISS plan, guys. And the KISS plan says 4 to 5 ticks below the triggers where the market shouldn't go. If I get a reversal bar in the direction of my trade, it's confirming that the market is going with the large chart. I'll use that to reduce my risk 2 ticks behind it. Until either I'm stopped out or the reversal bar prints, I have to sit on my hands and watch that number change over and over. I have to watch it go up, watch it go down. Whoa, we're at the bottom of the retracement zone. Let's see what it does. This is exciting, right? I have no control over what it does. I don't know if it's going to go up or down. What I do know is that this is a pattern that typically wins more than it loses. We can even go here, and this chart is also saying we're more likely to go up than down. And here's our mid band, right? And now we're waiting for a close on the correct side of the triggers for trading view. We got in a step earlier over here. Never guarantees a winner, guys, but this is our pattern. And if they make it down here, I just don't want to be in the trade anymore. Looks like this one might get us. We'll see. It's terrifying, isn't it? Trading is an adrenaline roller coaster. I've got a plan. I know that if I take the right trades more often than I don't, that's just a cost of doing business, guys. That was a good look. Only fly in the ointment was I could see that the sellers were fighting. No big deal. Follows the plan. Cost of doing business. We're going to wait for the next run. Crude oil, only 2 triggers through the 1-to-1s, and sure enough, it doesn't work. We're trigger counters, like card counters in Vegas, but with triggers. So we wait for the next pattern. Support held though. Remember when we hit support and the rules told us, hey, none of the triggers are through. Let's sit on our hands. Let's wait for the reaction. Guys, there was your reaction. And what you're seeing is a market that is struggling to smash through areas. What you're seeing is the market that is having problems getting where it needs to be. And guys, if you're a trading view trader, it never set up for the long trade. And then John Novak says, check it out. When that termination reverses the market, we can look for opportunity. Nicely done, John. All right, let's go look at some more charts. Isn't it cool that all you have to do is say, do I have momentum? How many triggers are through the area? And then just pump the brakes. Hey, that's probably not my best look. Let me sit on my hands. All right, Pete, let's see what you did. Pete says, there's my termination that reversed the market. There's all my momentum. And 2 terminations with the potential to break. Pete rides the momentum to the first fib. That's a good one. When he gets to the fib at 47, which is right here, 2 triggers through, 2 triggers not. He says, I'm willing to take a shot from the area inside of triggers right back to the area that could be problematic. When the problematic area breaks, he jumps back in. And then, Pete, the one thing you're missing on this little momentum look is momentum. Because the smalls are above the large, and it turns into that trend trade, and you're out of trouble. And man, this is in and out, get in, get out, get paid, get in, get out, get paid. Make a little bit of a mistake with momentum, but realize that when it pulls back to the area inside of triggers, it's just a trend trade, holds his position, and then gets paid at trouble. And Pete, just awesome chart read, awesome trading, just in and out. That's the difference between rookies and experts, guys, is just the ability to read quickly, going back to those advantages and making the determination, do I have enough? Do I see what I need to put me into the market, or am I better off being patient? Man, they tried, didn't they? And now we're right into Fibonacci support. And guys, when Fibonacci support is reached, and those large triggers are above the reversal bar marker, right now we have what's called the gap theory in play. And this is a pattern that says, hey, if you hit Fibonacci support, if you hit a midband, and the large triggers don't follow, they're above the reversal bar marker, that's that yellow line that shows you where the up bar goes, price is more likely to close the gap to that trigger than it is to just arbitrarily go down. I agree, Pete. You tried to take the momentum without the momentum. And it's hard to do that, right? It's hard to do that. So let's see if our gap theory comes into play, guys. Price reaches support. Absolutely no triggers break. Your brain should say, whoa, not my best look anyway. That's okay. And John says, hey, can you just buy that mid-band and support with this trigger look and try to ride it up? And then let me show you a trick, John Novak, that I'm sure you've never ever heard of. Guys, remember when I said as long as you're left of these triggers, it's going down, right? And that is just a fact of life. If you're saying to yourself, price reaches support, large triggers a full bar away, whoops, drunk fingers, I want to close that gap. Your most conservative entry is from the area with a close on the correct side of the triggers, guys. And you have to tell yourself, this area could be trouble, this area could be trouble, this is where I'm anticipating to go. So instead of just selling the blue line, waiting for that loss of momentum, that close on the other side, absolutely killing. It gives you the opportunity to get in. You can define your trouble spots, but the pattern says there's a good chance they're going to close that gap. And when they close that gap, they're going to rethink things, guys. They're going to say, all right, do we really want to go down? Or because we couldn't reach that fib, are the buyers going to jump in and try to continue up to that fib? Right now, the buyers are trying, right? They're just inching towards those trigger lines. They're looking to close the gap. They made it through the first trouble. Now they've reached the second trouble. There's a Fibonacci area, 2 triggers through, 1 above. The gap theory is still very much in play. And guys, look at them straight line back to those large triggers. This is just a pattern. This is a pattern that repeats itself all the time. And what this pattern does for you as a brand new user is it says, hey, let's not try to take that short from the mid band, from the 1-to-1s. It's less likely to work. Ladies and gentlemen, there is your gap theory in play. Now let me share a funny story with you. And when I say funny story, I meant a way that I got absolutely slaughtered 1,000 times until I learned this pattern. This was my short. Because of what I saw as momentum, and I said, man, this area has to break with momentum. And right about the time I'm losing this trade, John Novak is talking about this pattern. He goes, all right, let's head up to 61.57. Let's go close the gap to those triggers just like it did. And now let's wait and see. Is the market going to continue up right here? Is the market going to bounce off of them and continue down? When I have what we call a weak top, ladies and gentlemen, when there is a reversal seemingly from the middle of nowhere, and the market has been cranking up, guess what? Very often, your buyers are trying to get to this fib. So what do? We look for an opportunity. Maybe it's your close on the other side of the triggers. Maybe it's waiting for a snapback, trying to take a momentum style entry right at an area. The second buy is the same price as the first buy most of the time. Absolutely. So what John's saying is hoping it holds is almost always the same price of saying it held. I've got a great picture for that. No, my first long trend trade, 2 triggers through, John. So what we're doing is we're trying to be a little more conservative. Oh, I don't know what you're talking about. Let's talk in pictures instead of making me use my imagination. I'm way too artsy-fartsy for that. Way too artsy-fartsy for that. Are you saying if we get a trend trade here, it's about the same as over here? So let's go through our chart. Do I have momentum? I don't, because my smalls are below the large, right? Do I have a clear path? Not quite. I still have triggers at areas. So now, guys, if you're looking for a trade, you're trading a read, not high probability trend trade rules. You're saying because of this weak top, because of this termination, because these triggers didn't follow, there's a really good chance the buyers are trying to find 61.63. Let me wait for my small chart to turn and burn, and I'll look for an opportunity with all my indicators green right at support. So I see. So the trend trade that fails right here is pretty much the same price is what we're looking for over here. I see now, John. That makes sense. First one fit the pattern, cost of doing business. Your second opportunity comes through. 2 minutes for oil inventories. Thanks for that, Victor. Do you guys want to cruise over to crude oil inventories and see if they have a challenge? I have momentum. There's nothing in the way. Little snapback momentum off of the mid band. Wasn't quite in those triggers yet, guys. Let's see what they do. Oh, 32 minutes. Victor, man, you are no longer my secretary. Crude oil inventories is going to happen at 10:30, not 10. But I believe 10 o'clock was news. 10 a.m. on Wednesday is Fed Chair Powell testifying. So what we're saying is right now that market may spike or bounce. Have a great day. So this was your high impact news. You were on it. You just had the wrong name for it. So now we're looking to see, Pete. Now we're looking to see if this market reacts to Powell's news. And if you're in the Nexgen funding company, guys, 1 minute before, 1 minute after, you got to pump the brakes and wait for the reaction. Sometimes your pattern comes true during the middle of news. We'll see what they do. We'll see if they bounce and spike, if they try to continue the news, or continue the move. Or maybe that news is going to upset somebody with a lot of money and they may just continue down. We will know in just a moment. But here I've got momentum. I haven't reached the area. I've cleared the previous area. And I've got a mid-band sitting right inside of triggers. Guys, one of the things that I'm going to watch out for, these one-to-ones are not a termination condition. If divergence prints from a yellow one-to-one, very often the market may push a little higher. I may wait for a reversal bar, for a confirmation bar for entry. Just have to see what it does, whether or not that divergence is true or not, especially in a market that's been struggling to follow through. Does that make sense? This is not a textbook termination condition, but there is a little pattern you can recognize. Divergence from a one-to-one can push things just a little bit higher. It's a small chart anomaly that gives a little extra shove against that large chart. Divergence right from the one-to-one is what began to push it up. Let's see if we have another one. Divergence from the one-to-one pushes it up a little bit. So guys, when you see this, it's a short-term termination. John just put that in the room. And then what you find is that if you wait for that confirmation bar, if you wait for that reversal bar, if that divergence is true, if they do shove up a little higher, it gives you the opportunity to not sit and hope, but rather be just a little more calculated in your entry. Does that make sense? A divergence low here typically takes out the divergence high here, which is on the other side of your areas inside of triggers. One of the things about watching the market live, guys, is you're going to start to hear these little nuances beyond the very basic study, which is a lot of fun. Without momentum or a clear path, guys, they pushed below that area, didn't they? Don't have momentum. Can't get my triggers above. 2 out of 3 rules missing. No reason to jump in and hope. Can you guys give me a why? You can create expectations based on patterns, but waiting for rules to be met is the difference between hoping something happens and getting an indication that it's actually happening. What do you guys want to talk about? I don't have any other pictures from you guys right now. So the fact that we're saying, hey, I can't find my rules met is a great understanding. And it's awesome for you guys that are doing nothing because you're waiting for advantages. You're waiting for that edge. Let's see what TradingView is telling us right now. TradingView, the NASDAQ says up, but guys, we're now on the wrong side of the triggers here. So there's still momentum up, but we're on the weak side of the triggers, which means that it's going to be a little harder to push up. And sure enough, they try to push down. The buyers fight. They're trying to push down. We're looking for just a little bit of cohesiveness here. We're looking for something that says, let's get things going the right direction. Let's get things going in a consistent direction. S&P is doing the exact same thing. Weakness on the wrong side of the triggers. And you can see that the sellers are having some luck from HVA lines, coming from zones. No close on the correct side of the triggers at the mid bands, but very much a waiting moment. Crude oil mid band held like a champ. Didn't set up your HVA trade. Gold hits your zone. weak side of the triggers. And now we're going to look for opportunities. There was your HVA trade right there. Pull back to the HVA, close above the triggers, starts up, hits a zone, comes back. If you waited for confirmation to trade the pattern, you may have just caught a trade. Pete says, not a great large chart. Not the best momentum directly into a termination. But since it says down, Pete says with small chart momentum, I'll try and catch a little something. A quick move, a 10-tick move, a $100 move. But here's the deal. It's $100 on 4 contracts. I love a $400 trade. Love a $400 trade. Nicely done, Pete. Finding a way because of your chart reads. Still don't have momentum. Still don't have a clear path. I can't find a rule, Matt. Does anyone see something different than I see? See all the momentum. Definitely see the clear path. Divergence didn't print. It did make it a tick or two below that resistance. It's a tough look. Some of you would catch it. Some of you wouldn't quite get there. Miss it by a tick. So now we're just hoping, guys. We're hoping for an entry. I've got everything that I need on my large chart. I've got momentum. I've got my clear path. The only thing that I really need to have happen to have my rules met is I'm looking for it to come back to this mid-band, to this fib that just printed, so I can try to sell the market and continue with what's going on here. Does that make sense? You guys following me? This says down. This says I have momentum. And this says I've got room to my target. All I really need is an entry. By defining where the market is most likely to continue, I know where the market shouldn't go if it's going to be one of those winners. This is not one of those 50-50 trades, John. If you had paid attention earlier in class, I'm just kidding. I like to give John grief a little bit. 50-50, I think this is the one that we did. Means that 50% of your triggers have made it through the area that could be problematic. 50% have not. And we're counting the trigger lines. How many have made it through? And what we're saying is that if I don't have that clear path, I'm going to rely on momentum in an entry area to get me where I need to be. Divergences represent a loss of momentum. You have to be aware. The first one worked. First shot's typically the best. And then when those divergences start printing, you start seeing those challenges. You start seeing those fights. Man, they're trying, aren't they? They just haven't. Look at what they're doing right at the area. The sellers try, the buyers fight, the sellers try, the buyers fight. Let's get some agreement, guys. Get some agreement. Let your indicators tell you it's time. Sellers losing on the S&P and the NASDAQ? Yeah, they are. Why does John say that? Because his fast-moving averages are starting to move up. His slow-moving average is pointing down. Guys, they're dissecting a fib. This is about the biggest go make a sandwich pattern I could ever show you. No momentum, triggers dissecting an area, and the small chart is dancing like a cat on a hot tin roof. And Pete says, you're above the area that could create a bounce. Because the rules say, let's do it. Let's go through, guys. Let's address those things. Play along. What direction is the large chart going? Down, because it's red. Do I have momentum, guys? What do you think? Do I have the advantage of a market where the odds are favorable for it to push down? Does anybody see it? Smalls below the large, separation. You're exactly right. Do I have a clear path? I sure do. Do I have areas inside of triggers for an entry? Darn tootin'. The only thing I'm not in control of is whether or not the market comes back for me. U.S. new home sales supply at 9.8 months in May at current sales rate versus 8.3 months in April. I don't know what that means. John, does that change the fact that I have momentum path and a potential entry? That's what I need to know. What does that have to do with my rules? Still nothing to do over here. Nothing unless buying homes. All right, guys. Let's see if they get us. We're still watching. If divergence prints from this 1-to-1, guys, there it is. Do we wait for a confirmation bar because it may push beyond the areas? This is one of those things where you're going to have to develop your own plan. You're going to have to say, you know what? I'll take it at the area inside of triggers, understanding that it may push higher. That's okay. My initial stop will be where the market shouldn't go anyway. Some of you will say, because of this divergence, it's more likely to go up to 65.01. Perhaps. Some of you will say, I'll force the entry up here at the pivot stop out, and my stop will still go where the market shouldn't go. Pretty cool, right, Jen? So this is the difference between only posting in the room and talking about what you guys do and watching it live. Because there's a million lessons. I mean, there is a million lessons. And some of it is, I've drawn little things for, hold on. I'm going to find it real quick for you, Miss Jen. One of them is small chart 1-to-1s for management. Without the divergence, looking to go. Once that divergence prints, if I'm in a trade, Jen, this becomes an opportunity to manage, to say, okay, I'm going to wait for confirmation to get back in because that's problematic. So there's two approaches. Neither of them is the best approach. Some of you will say, I don't want to risk missing it. I choose to take the entry low, right? Jen, I hide these things from you. So here's one of them. Small chart 1-to-1s, and that's for management once you're in a trade. But can't you use those same management ideas for taking a trade? Of course you can. Another one is 2 divergences. Looking for that second lower divergence. So if I'm in a trade and a second lower divergence prints, I can choose to exit and just re-enter with a confirmation bar because the second lower divergence may push the market beyond the previous pivot. So I'll put this one in here as well. These are kind of that expansion. These are kind of that next level. And Jen, these ideas that I just dropped in the room, these are all concepts that you're going to find on this one. Exit conditions. Exit conditions. Why will I exit a trade? And I'll put this in there. So what we do, and what most users do, is they start very basic. They start, I'm going to take a high probability trend trade, and I'm going to manage it. No audio? Guys, give me a Y if you can hear me. All right. Cool. Thank you. Pete will know when you guys put the Y in the room that it's probably him. No worries, Pete. So guys, remember, when you start taking these trades, what happens is most of you are going to start off very basic. Most of you are going to look for these 3 simple advantages. You're going to define momentum. You're going to define clear path. And finally, you're going to find that entry area. And it's just going to look like this. And most of your trades are going to look exactly like this as a brand new user because this is the easiest. This is the trade rooted in the core advantages. The idea that momentum and nothing in the way is just an outstanding recipe for success. There's my picture of momentum and path. Guys, when I have those two things working for me, I got the most souped up semi you've ever seen on a straight road, and nothing is going to stop me until I hit those mountains. That's how I feel about those first two advantages. And then the entry area initially is very clearly defined, just to pull back to an area inside of triggers. And once you learn this concept, once you get the idea of being able to recognize strong triggers, of getting to an area and starting to count how many triggers have made it through, what happens through a little growth of the software, a little time reading indicators, is you start to find opportunities in between the easiest opportunities. You start to find trades based on a little bit of momentum, a little bit of direction, and taking quicker profits because they're not that core perfect trade. And that's one of the wonderful things about this classroom is you're going to see about 1,000 ways to do things, guys. And when price gets to Fibonacci support and none of the triggers break, exactly like it did here, there's your reaction. Boom. Do you think somebody else knew about that fib? Do you think somebody else knew about this fib? And now let's see what they do here at support. Are they going to break or are they going to hold? That was pretty cool. Victor, this is that jockeying for position. This is that jockeying for position before inventories. Whoops. I missed my exit because it was too fast. But that's how quick a chart read happens. 3 triggers through. Pull back to the area inside of triggers. I made $100, and if I didn't knock my chart out of sync, I would have been break even and exiting with that second divergence. Pretty cool, right? Do you guys see how fast that happened? It was too fast for me to move my second top. That's one of the reasons we don't trade news. But that's how quickly your chart reads happen with a little bit of study. I had everything I needed to take this entry. I still made $100 on it. And then there's that second higher divergence. John, I couldn't move my stop quick enough to get it out of the way. I could read my entry, I could take my entry, I could grab my first profits, and then Miss Jen, divergence from a 1-to-1, push the market higher. Did you see that? Everything that we just talked about happened 100% truthfully right in front of you in a live market. So how do you learn to get to where you want to be the fastest? Well, use a spreadsheet. 6,000 contracts. Learn your patterns. And John says make 1,000 picks and post them. Guys, this spreadsheet, I've done a lot of work to give you a head start. If you're working on identifying strong triggers, here's over 50 pictures of strong triggers annotated, giving you the description. There it is on weakness, so you know when your rules aren't met. There's your clear path. There's your terminations. There's your entry. About 500 pictures of client trades for you to study, a place for you to put all your pictures, and guys, a place for you to even track your progress and the feedback that you get in class. And John said it, he or she who posts the most usually makes the most in the long run. The person putting the most pictures in the room are the people getting the most feedback, guys. And the people that get the most feedback are correcting mistakes, learning how to manage more assertively, and understanding what it takes to find success faster than the people that are sitting on the sidelines hoping that watching me and watching videos is going to get you where you want to be. And guys, that idea of posting in the room is the first step in becoming a confident trader. Using that spreadsheet and tracking your progress is even better. And John says posting wins is fun, posting losers is educational. Let me show you why posting losers is educational. Because if you post this picture in the room and your feedback is that it's into a termination, and guys, this is a page out of the Mark Novak story. When John Novak ran this room, I would post, and we'll just show you in the live market, I would post trades trading into this area and losing. and trading into this area and losing, and trading into this area and losing, and trading into this area and losing, and trading into this area and losing. And guys, I had no idea that I was breaking rule number 2 because I wasn't participating in the class, because I wasn't asking for help. And just full disclosure, I lost $5,000 the first time I went live. It took me 21 trades to do it in about 2 hours. I could have done that, 2 horas, for my Spanish-speaking friends. So guys, this was the result of me being afraid to post in the room. True story, 100%. But what happened is I couldn't lose that money again. So I started posting in the room. And John Novak asked me, he said, how many times are you going to trade into termination conditions and expect to win? And then he followed it up with, hey Mark, let me show you exactly how to avoid this trade. So when price reaches an area, you've got to look at your triggers, and you got to say to yourself, my triggers haven't made it through this area. And he goes, this is your big red flag. This is where every time you see this, I want you to just sit out. I don't want you to take a trade. I want you to pump the brakes. And then what happens is I don't lose $300 here, and I don't lose $300 here, and I start cutting these losses out of the equation. And then the second thing that happens is when my rules are met, when I'm not trading into termination conditions, I'm finding opportunities to make money here, and I'm finding opportunities on those medium probability trades right here, and maybe a medium probability trade someplace else. And by eliminating the unnecessary losses, the avoidable losses, guys, you give your P&L a chance to thrive by taking the correct trades, by having those advantages, by working off of the simple concept that momentum and path pay dividends. And that is my true story, guys. And when I started with this software, I'm sure John thinks it's funny now. He probably doesn't even remember it. John told me 3 things. He goes, I want you to write down your rules. He goes, your rules are your lifeline. I want you to write down that when you have strong triggers, when your path is clear, you're going to buy a pullback in an area. He goes, and then I want you to go take pictures of your rules being met. 10 longs and 10 shorts, guys. He asked me to take 20 pictures. And he said, and then I want you to post in the room. And I just want you to get help on everything you do. I want you to identify the good and the bad. And everything you do, win, lose, or draw, post in the room. Because if it's right, we'll celebrate it. But if it's wrong, we'll learn how to fix it. And guys, true story. My ego said, your last name is Novak. Your brother wrote the software. You are entitled to win these trades. Just go trade. You don't need him. And that's where the $5,000 got lost instantly. So when I lost that $5,000, I had to make a choice. I either follow John Novak's path, the one that he's been teaching for 25 years, that's been effective for people, or I quit. Guys, I followed the path. And once I followed the path, that's when my chart reads started making sense. That's when my P&L changed. That's when my abilities to read charts changed a lot. John says, my rule's true on NASDAQ for trend trades 3 times with nothing in the way, odds favorable momentum and a pullback since 6:35 a.m. So since 6:35 a.m., he had a trade, he had a trade, he had a lull where there was absolutely nothing to do, and then he had a trade. 90% of his day is spent doing absolutely nothing. 10% of his day is capitalizing on the advantages that are easily read with a little bit of study. Pretty cool, right? And John says, more trades if you break rules. More trades if you break rules. But when you break rules, you start losing advantages. You guys are going to hear a pop real quick. I've got a big vicious spider that I have to eradicate because spiders give me the willies. Sorry. Not breaking. Different rules. As long as it's on your plan, right, John Novak? As long as your checklist says this is what we're doing, that's the path of success. Because the most successful traders do the same thing every day. The most successful traders take the exact same trades with the exact same advantages. Because there is a statistical advantage, there is an edge. Price reaches Fibonacci resistance. No matter what you think about this momentum, I don't have any triggers through the area, which means that I'm sacrificing the clear path. I do have momentum. I do have an area inside of triggers. This would be that different rules, right? If I take the picture and I go back to this, I have momentum. I don't have a clear path. I have an entry. You have to answer the question. Are you willing to take a trade missing the clear path? If you are, where does it come from? How do you manage it? Where's the trouble? And we'll see how this one plays out. Too close to inventories? John says don't do it. You'll lose more than you win. Which brings me to this picture, guys. 36 times the market created losers if you chose to trade into a line. 36 times. 10 times if you waited for your rules, there was an opportunity to get paid. One of the things that you guys have the benefit of is, yeah, that's a good picture, isn't it, John? That was the day before Thanksgiving. Why is rule number 2 a rule? It's not the one time that it breaks, guys. It's not the one time that you get away with it. It's the 36 times that it pulled money out of your account, and every one of those losses was avoidable. Every one of those losses didn't have to happen. Let's see. So this is the NASDAQ. And guys, when you're using minute charts, it's a little bit different. We've reached the outer band. We've gotten down below the triggers. And your small chart, your 1 minute chart is saying, okay, if this really is a top and you want to look for a trend trade, you've got to get to the mid band to the top of that zone right at an HVA. But the rules say wait for a close on the correct side of the triggers because you're fighting the immediate momentum. And we'll see what happens because this says up and that says down. It's a little more aggressive management. The S&P is showing the same thing, potential for a trend trade. But what are you fighting? What are you up against? Crude oil. There was that big old spike, and now we're starting to get above stuff. And it all came from a termination. And then gold is directly into a zone. There's your breakout bar. There's your pullback to the HVA. This was your HVA short. And now you're just waiting to see if they decide to go down. So, guys, I'm going to take a few minutes. Whoa. Termination condition. I'm going to take a minute or two. Crude oil inventories will be up in just a couple minutes, guys. When I come back, everybody's going to say, wow, I'm so glad I counted my trigger lines at resistance and didn't lose this trade. Avoidable losses. I need you guys to speak up and ask some questions, guys. Tell me what you want to talk about because my voice is going to go out if we don't get a little participation. I'll see you in 5 minutes, guys. Go stretch your legs. Second half. Pete says not a lot of reaction to inventories. I feel like there was a pretty good something there. It was a big fight. Not a huge spike, but definitely a little bit of a fight. Your rules keep you out of the fight, which is one of the amazing things. Weak triggers, not above the area, 3 divergences, and guys, it's a great opportunity to do nothing. And that's what we're going to do. So now we're going to start embracing the idea of nothing. 3 divergences, once again. No separation between the triggers. And guys, we've seen these one-to-ones come into play with divergences. I'm going to keep eyes on that. I got a message from my boss that said, quit trying to fill every second of the day up with words. So I'm going to do that, guys. I'm going to leave it on you. We're going to watch the markets. We're going to wait for something to come in, wait for those rules to be met. Or you guys are going to say, hey, Mark, can we talk about this? Can we talk about price reaching zones? Do I still count triggers on TradingView? Absolutely, you do. Never get it closed. So I'm very much in a nothing to do zone right now. This is the S&P, guys. Small chart says don't do it. Large chart says we'd rather go down than up. The fight is on. Remember when we had a circle on this fib? They still may be shooting for it. We'll find out. What do you guys need help with? What can I help with? What do you want to talk about? I'm going to mute my microphone a lot this second half. Open up the NASDAQ. Maybe we'll have more to talk about. Nobody, huh? That's all right. I was shy once too. There we go. So, Byron, we're looking at, most often, we are looking at crude oil and the S&P. Those tend to be slower markets, smoother markets. Those are the markets that tend to make the education process the absolute easiest. I just opened up NASDAQ because I'm looking for something else to talk about. But everything that we do revolves around a couple pretty simple concepts. Are you new with us, Byron? We're always looking for momentum. We're always looking for this idea that when there is a separation between triggers, when the colors all match, in an uptrend. Oh, awesome. So welcome to Nexgen. Man, awesome. So let me go to this picture then first, and let me show you exactly how we do this for the new users. And what we're looking at as a collective here. We're looking at both the S&P and crude oil typically, because those are the smoothest flowing markets for educational purposes. What I am teaching is something that you'll find this pattern on pretty much any market you look at, whether it is crypto, forex, futures. I mean, it happens. So we're learning a pattern. And this recipe right here, this is the high probability trend trade. This is a trade that when you learn the rules, typically wins about 70 to 80% of the time. And the rules are, there's only 3 of them. So there's strong trigger lines. We talk about this every day. And this is nothing more than a separation between these large, these are large, these are small triggers. And when there's a gap between them and all the colors match, that's a market where the odds are favorable for it to continue in the direction of the trend. And we talk about rules met, rules not met. When there's no separation, this is your pump the brakes kind of moment. Let's do nothing. We couple the advantage of momentum. with what we call a clear path. And a clear path means that you're recognizing that the market reaches these key areas on your large chart, and all you're going to do is count triggers, and it's going to let you know if none of the triggers get through the area, you're going to sit on your hands and do nothing. You're going to wait for the reaction. If two triggers have broken through, it does have the potential to break, but it's not yet broken. Three triggers says, all right, you've got a shot at that potential to break. So we're going to talk about this in a live market all day. And then finally, we will go back and forth and we'll talk about entries. I lost my picture down here. And entries for the high probability trend trade are just pulling back to an area inside of triggers on what is a smaller, faster chart. So when the rules are met on the large chart, you can take this bigger, slower chart advantage, the momentum, the path, and you can refine it down to an entry area. And that's the first trade. And I'm going to drop in the room right now. It's a Word document. And that Word document is titled Trend Trade Simple. And it lets you know what we do each day. It's 5 days a week we have a live class, guys. And we talk about momentum, we talk about path, we talk about entry. And we're just going to see it in the live market. You're welcome, man. I'm glad to have you with us. Once you understand how to identify those strong triggers and you get good at counting the trigger lines through the area, and you'll learn to trust the idea behind this, what happens is you'll find your entries. But these two are what open the door for more trades, more opportunities. So here's your rules, here's your charts. I've got links to all the pictures. Here's your indicators defined so you know what you're looking at and where you're looking for it. The advantage of momentum, areas that can be terminations, how to define that termination condition, what it looks like as they're breaking, and then all the way down to how to get into the market, and then a little something on how to study. Everything that you need to be successful with the software right there in a document to get you focused on that one best of the best trade. And we are at a point where we're saying, okay, there's that momentum look. Smalls below the larger wide, there's space between. But now price has reached this divergence low, and I don't have the trigger lines through it, and I'm sitting on my hands doing nothing. And I'm saying to myself, it's more important for me to have an advantage. It's more important for me to have an edge than to worry too terribly much about the money. And if you just scroll a big chart out, you'll see that these key areas create bounces. And there's been a huge amount of fights in the market today. And crude oil is very much a making you sit on your hands kind of market. And then the S&P is kind of doing the same thing. We don't have that advantage of momentum. Um, and there's a lot of nothing to do in the market. And that's one of the things that I try to really stress to you guys is that 90% of your day is going to be doing nothing. 90% of your day is about sitting on your hands and waiting for an edge, waiting for a pattern that you can prove wins more than it loses. And your focus shifts from becoming a bazillionaire to trading a process, to executing the methodology so that you can do it. And then once you start to learn that when you have this much momentum on a large chart and there's nothing in the way to stop it, you'll be able to find a way to capitalize even more. And Pete said, Mark, let me show an example of how important all that momentum and nothing in the way is. And Pete jumps in and rides that momentum right down to the key Fibonacci area where he takes his target off. And just to give you an idea, he gets in at 65.14. He gets out at 65 flat. So that's 14 ticks in a crude oil market, 2 contracts. This is a $280 trade that Pete just executed. And it took, well, the timestamp is 39 to 39. We can assume that it happened in a matter of seconds. And that's exactly what we bring to the table as Nexgen, is we give you the ability to recognize when a market has a higher chance of continuing. You can identify the areas that could create problems, and you can find opportunity trading in between the areas, trading away from Fibonacci, trading towards Fibonacci. And one of my favorite pictures from basics, the easiest trades that you will ever take with this software are the ones where you have the separation, where there's nothing in the way, and then we use that simple rule number 3 to define where this tail is most likely to form, and you ride that momentum right down to the key Fibonacci area that could stop the market, or you find your entry and you ride that momentum straight up to that key Fibonacci area that could stop the market. And it is a methodology Nexgen has been teaching for the last 28 years, I believe. We've had live education rooms since '99. And it's the same thing. It's an opportunity for you to participate, for you to learn some rules, for you to look for some opportunities, and capitalize. And what we're looking at right now, every time you see one of these cyan lines, it means there was a loss of momentum. When you see them stepping up against the downtrend, the market's more likely to go up. We're beginning to get momentum. We've reached a divergence high. None of my triggers have broke. I'm in a holding pattern. I'm in a waiting pattern. I'm in a sitting on my hands pattern because I don't have the advantage of a clear path. Do you guys see it? Now the temptation is to say, well, I hope this is the time it breaks. I hope this is the time that the market just smashes right through it. I wish it would go up because I've been real patient today and I deserve a win. The market has defined a very clear range. We're going to wait for those advantages to break out. So guys, until those advantages break, until we get there, I'm going to mute. Let me know what you want to talk about. I hate silence. Bugs me. What's the read on crude oil, guys? Odds favorable momentum. Strong triggers to the downside. Absolutely no triggers through support. None. Not a one. They've already tried twice. Heard that TD will be iOS friendly. Oh my gosh. Oh, TV? Absolutely it is, Estefania. TradingView, there's a mobile app. I can put it on my iPad. Let me see if I can reach my iPad in here. And I'll take a picture of it and I'll show you. It's pretty amazing. We're going to be sitting on the beach day trading. That's my goal. Oops, I don't have any internet on my iPad. I can't do it. But yeah, you'll be able to see all of this exactly like you're seeing it in front of you, Estefania. I would take my iPad to the tattoo shop and just trade in between clients, and you can do it at anywhere you have a link, anywhere you have Wi-Fi. You'll be able to trade. You'll be able to look at these things and say, all right, let's make some money. I realize I'm in the middle of the desert, but I've got Starlink. I've got charts. Let's do it. All right, so let's try this approach. Maybe this will work. What's your thing, guys? What's your biggest challenge with trading? Let's start a dialogue because everybody has one. Everyone feels like there's something that keeps them from getting everywhere that they want to be. Mine was early entries. Well, first it was termination conditions, and my brother fixed that. It was just early entries. Watching the money, not the setups. That's it. That's a trust issue, right, Jen? Because when you believe that the next trade is coming, when you believe that your plan is a good plan, it makes it easier. It's hard to not watch the money. There is on TradingView, when you close TradingView, they give you messages every time, and I think they're funny. And my favorite message from TradingView is the market doesn't care about your position. Um, and the market doesn't care if you have a mortgage, and the market doesn't care if you need to pay for your Corvette, and the market doesn't care if you want filet instead of round, right? The only thing that the market cares about is going up and down, and we find our opportunities within it. Money because you don't care. It doesn't care that you have to pay school fees. Absolutely. So, Jen, what's cool is when you begin to study and when you begin to go through this, could you imagine believing in that look so fully that you never take a trade into it? How many losses does that eliminate for the average trader? There's a lot, right? And then on that same token, when you believe that the market is less likely to push up like this, another avoidable loss. And one of the hardest things you'll do is, if you don't find an opportunity between these 2 points, is to believe that the market is going to provide another opportunity. You're guilty. You believe that sometimes your ego gets loud. My ego, if you've ever met a Novak, our egos are pretty good. John, this is the NASDAQ. Did you really sell against everything, or was that your exit? Mine is so loud, Jen. Okay, I was going to say. So John went long right up to treble, let treble hold, let everything reverse, pulls back to areas inside of triggers. He finds a way to get in, carries it all the way down to treble. Was hoping you got here, you had to pay a little bit more. They didn't give him his entry. So he gets in, manages it like he got his entry, and takes it all the way down. Great trade, John. So Jen, I think that's one of the biggest things is understanding your challenge, right? Understanding your challenge, understanding that that there's opportunities. This is 3 terminations, pull back to the midband, right? When a good bottom is put in, these small triggers roll. You can find an opportunity, maybe to take it up to the fib, maybe to take it up to the next level. Maybe it doesn't go, but you'll find a way. Does everybody see? First, it stops the market. My large chart says, hey, change is coming. And then we just kind of get on the good stuff, and it pulls right back to a mid-band right at those large triggers. And there's opportunities outside of the opportunities. There's opportunities to get long, to get short, to take entries, to take exits. And obviously, this isn't the right management. We're talking about first we recognize a termination condition. Once I recognize the termination condition, I wait to see what my small chart tells me. And my small chart says, hey, we got a good shot at pushing up. You'd have to really keep your stop below the pivot if you took this one. Got in really late, because I'm showing you it's the same concepts. I don't have momentum. I do have a clear path up. I'm coming from a termination. Small chart change shows large charts where you can't see it. Probably an HVA line or something over here. Let's go to crude oil and see. There's your HVA line. There's your bottom holding. There's your push up. There's all the trouble in the way. But that large chart says, hey, we're likely to go up more than we're going to go down. And right now it's doing it. And we reduce our risk a little bit right behind it. And it all starts with the recognition of a termination condition. It all starts with price reaching support and none of the triggers breaking through. So not a high probability trend trade. But what you're going to find is that when you start using that language, what's in favor of the trade, what's against the trade, what's good, what's bad, there's so many more opportunities. And when you start focusing on the money, you start missing opportunities. You'll talk yourself out of things. There's this devil that sits on your shoulder and says, "Hey, you might lose, get out of that perfect trade," or "Hey, you might be able to win. Trade into that termination condition." And that's where checklists come in. Gap Theory said sell it on the NASDAQ. We all listen to our devils sometimes, right? And guys, this one, whoops, this one's still going up. I got out of it because I didn't take the entry that I should have taken. I was in an unmanageable position, but that was the one right there. First it's a termination, then things roll. And this is why John Novak sold. Because when price reaches Fibonacci resistance in a midband and the large triggers remain a full bar away, it's likely to close the gap. We'll see what happens on that one. Great chart read. Everything says up except odds favorable, right? The termination held. The small triggers are vertical. The small chart showed change. Nexgen taught a trade in 2004 that says buy a pullback to those small triggers after a termination. Guys, it lines up right with a midband, right at the triggers. That's a trade Nexgen started teaching 21 years ago. It's void of momentum. It is, but it's got a clear path. You can define an entry. You can define risk. I must have missed it. Sorry. I didn't mean to. Give me 1 second. I'll find it, Pete. All right, and Miss Estefania, I just took a picture of my iPad with TradingView on it so that you can see it. Let me, I have to do the roundabout. Let me get the picture to my chat with John, and then I'll pull it off that chat and show it to you. And then we'll get Pete's pictures because Pete needs me to talk about it. So, just kidding. Pete, I don't know where I missed it. Oh, there it is, right there. My bad. Momentum, nothing in the way. Gets out. And then Pete chooses to trade into a termination condition. Pull back to the midband with divergence in between large triggers. Wait for reversal confirmation. A little late 10-tick winner out at target. And Pete says that because of this momentum and no change, he's willing to trade into the termination condition, but he chooses not to hope the termination condition breaks because his triggers don't give him any indication that it would. Breaking rule number 2, and it works. Miss Estefania, so there it is. That's a 12.9-inch screen. But you have everything you need. Everything you need. No, it was a good read, Pete, and it was aggressive. It was aggressive management because you knew you didn't have a clear path. And that's the whole idea, isn't it? When you speak to yourself in terms of advantages, you'll find ways when you know what you're up against and you waited for confirmation. You didn't just arbitrarily get in. You forced it to go in a direction to try to retest it. I think it's wonderful. And then TV is iOS perfect, John said, Mac, iPad, whatever. There is an iPad app specific. Absolutely there is. And there it is right there. Nice trade, Pete. There it goes. Pulled right back to the small triggers, didn't it? And off it goes, ladies and gentlemen. It almost feels like I predicted it. It almost feels like I was able to call that shot based on a pattern. And there you go. And then once we hit Fibonacci resistance, we got to talk to ourselves. Okay, price reached. Where are my triggers? Guys, this is a target. Until price reaches it, it's a target. That was your first entry. That was your second chance. That was the one that was the pullback to the small triggers, which is a trade as old as time. And right to Fibonacci resistance. Does everybody understand what happened there? First, the large chart said absolutely no more shorts. Then the small chart confirmed it with 3 divergences. And then it rolls over. So if you entered at the midband on the small chart, same idea. So if I enter here, Jen, I would probably let it make a down bar or 2, maybe 4 or 5 ticks below the triggers. Because if it blows below here, it's probably going to retest the area. This is a super low risk trade. Does that make sense? Same concept. Because if it trades down here, we're probably going to retest. Let's see if we can do it over here. Well, there's the exact same thing off that term, right? And it doesn't happen. Never comes back. It's nice when it's hard to find a loser. Well, I don't know where to look. So same concept, same thing here. If you're in at the midband, 2 divergences, and we talked about that, right? Here's a cool pattern. Let's turn it into a lesson. Is everybody comfortable with the concept of a pivot stop out? You get a pivot with divergence. The market comes up, takes it out by a couple ticks, heads back down. Have you guys ever seen this, looking for a high probability trend trade, and you're like, man, 2 divergences. That doesn't kill it. It takes 3. It takes 3 before things get bad. Let me show you a pattern that tends to repeat itself a lot. Not guaranteed, but it does repeat. This little pivot stop out here typically takes out this lower pivot. That second lower divergence typically takes out the previous pivot, the same way a divergence from a 1-to-1 does. So Jen, if you were saying to yourself, I'm going to take this trade, this pattern here says maybe you use that confirmation bar. Maybe you let it take out that pivot and start to head back up because of an entry pattern. And that's kind of next level. That's not just a pullback to an area inside of favorable large triggers. Now you're starting to take your chart reading just a little bit further. All right, John. Price reaches resistance. None of the triggers break. Gap theory's in play. And you just get in. You sold the spot. Tried to jump in. A down bar got you. No. You guys want to see me beat John Novak up real quick? A down bar didn't get you. Trying to anticipate the down bar got you. When we talk about the things that we can do better as traders, that's one of mine as well. Hoping that bar becomes a reversal bar to move down, and it just never did. Yeah, we've all done it. And then look, once it closes below, John says that's a better trade. And then when it doesn't go, out break even, no harm done. Comes back, that's his spot, gets in. Rockstar. Good job. You can't hide, yeah. Well, I couldn't hide from John. That's how I learned the trick, Jen. I would post a picture just like this. And because I was hiding winners. or I was hiding losers because I was embarrassed a little bit. And I would scream, hey, look at me, winner, right? And oh, look at this, John, I made $500. Be proud of me. And John would say, cool. Where's the $700 in losses, Mark? Because this lesson is going to give you more than this lesson ever will. And that's what John was talking about when he talks about don't hide losers. Show the losers. The losers are where it's at. Guys, it's not the easy trade where I make easy money that I need feedback on. How do I avoid still being down $225 after I just won $500? So I look for that. And John is short NASDAQ again. Let's look at his large chart read. Odds favorable momentum. All the triggers below the 1-to-1s. Can anybody find something wrong with that large chart setup? Does anybody see anything that doesn't suggest that market's more likely to go down than up? That's the mother lode. That's the pattern. So Byron, separation between the triggers means that this is a market where the odds are favorable to go down. He has not reached these pink 1-to-1s, and 1, 2, 3, 4 triggers are below the yellow 1-to-1s. And the end result is that he gets paid right where the market was likely to go. Pretty cool, right? That's your trade, guys. So that was from, where did you enter? From 68 to 53. That is 15 points. I'm not good at math. So that's 15 points times $20 a point. John, how many contracts did you trade on that? 4 lot usual? 4 and 4. Can you help me with the timestamp on this trade? How long did it take you? You added on as it got deeper? So what I want you guys to recognize and realize, John takes the wrong entry, takes the wrong entry, takes the wrong entry, takes the right entry. He's just building up contracts because this says we're more likely to go down. He doesn't want to lose. He doesn't want to miss it. That's his right. And then you were out at 61.25. Yeah, you were out super early. It's not even technical. You guys remember that magical phrase? That magical phrase, what's changed? John knows what he's doing. When he's right here at that blue line, ATM was set to 8 accident, right on. Oh, 4 on the target. 8. At this blue line, this is where you guys are going to have a management decision. The large chart still says down. The large chart still says strong. The large chart still hasn't reached the area. And the small chart, you can't even find something wrong on that chart. It looks like John got out on a little bump up, which means he said it can either break or get me, but I'm getting paid. Nice trade, John. It's a great looking trade. And everything is dependent on the large chart. And then Jen, your long is still going. Actually, that's not true. You probably got out there. And now we're heading up. 2 triggers through. 2 triggers below. Odds favorable momentum. We're just going to hang out. John, you don't have momentum. You're directly into a termination condition. Your small chart is showing change. And you went short. Somebody wrote those for who knew stuff. All right. I'm rooting for you. Let us know how that turns out. S&P has strong triggers, from a termination, hasn't reached the area. I like your chances now, John. So if I get a reversal bar before I hit the yellow 1-to-1s, the rules say the mid-band inside of those triggers is the highest probability place for this market to continue down with momentum and nothing in the way. So now we're just waiting for an entry, guys. We'll just keep it here and watch it. Is this the fight? There's my reversal bar. Oh, there's two divergences. Do you guys want to see if they follow that pattern? Let's see if those two divergences take out the previous pivot. There is no divergence on high, so no line. I don't know what you're saying. Oh, there's no divergence on the high. John says there will not be a PSO. He shook his magic 8-ball. Momentum. Haven't reached the yellow 1-to-1s. Divergence with triggers down do not stop the market. So you're saying it takes 3 divergences on the small chart to talk you out of this entry, John? Because that's a termination condition? And that's the advantage gone? That's what it sounded like. Are there any questions about this chart? Smalls below the large, larger wide, space between. I have the advantage of momentum. Have not reached the next area. Pull back, looking for an area inside of triggers. If the entry is taken, if they decide to give it to me, my stop will go right about here where the market should not. And now the only thing that I'm not in control of is whether or not we get an entry. May not get PSO of high, divergence, triggers going down. All right. Nice read. They just didn't get us yet. Just didn't get us yet. So John's saying when you're looking at divergences, watch those small triggers. You can keep adding things to it. I like to keep it simple. I like to keep it simple. I like to say if I have momentum in a path, area inside of triggers, the only thing to keep me out of that entry is 3 divergences. As you grow at the software, you start to see more things. You start to see the same things. And guys, that's one of the best ways to study. We talked about divergence from 1-to-1s earlier. One of the things you can do is you can go through and you can start to say, let me get a little sample. Divergence from a 1-to-1 and it pushes lower. And divergence, divergence from a 1-to-1 and it pushes lower. Divergence from a 1-to-1 and it pushes lower. And what you're realizing is that this is a repeatable pattern. This is a pattern. Divergence from the 1-to-1 off your entry gives it a pretty good shove. This is how plans are built. Not always divergence from a 1-to-1. Okay, so now I have to say, I have momentum, I have path, my small and my large have gotten below this divergence. That's my recipe for breaking an area technically. I've got 1. This would be my second. I've got my area inside of triggers. Try divergence from 1-to-1s with no triggers breaking. It's very powerful. If you guys go find 50 of them and you'll see. I love it. Take a lot of pictures. And it doesn't have to be of a trade. That's the thing. You don't have to be in the market. There's 1, 2, 3 divergences in the same price range. That's what reversed it out of the range, right? There's price reaching an area with no triggers breaking through. That's what stopped it cold. Same thing that did it here. There's your gap theory. Worked like a champ. No triggers through. You guys see how you don't have to be in the market. You don't have to take a trade and hope that the lesson comes to you. You can go back and scroll. You can take pictures. You can annotate charts. You can drop them in the room. And you can begin to realize that there's things to do. Divergence low, fib hit, terminations on both charts. What a great place to get paid. Nicely done, John Novak. Great chart read. Two divergences. This one is broken. Still momentum. Still room to the 1-to-1s. Still an area inside of the triggers. Still where the stop would need to be. Got paid twice. That's always a nice thing. Are my rules met? Absolutely they are. Because once the small and large get below that line is taken out of the equation and it resets my count. I'm looking at two divergences, area inside of triggers, and it's all predicated by odds favorable momentum and a clear path. All right, we're in. 1, 2, 3, 4 ticks above those triggers where the market should not go if it's going to be one of my winners. First target is at $100. If I get a reversal bar, I'll minimize my risk above that bar. Second target is $200 away. Is everybody with me? Why did I take the entry? Because of momentum and path. Where did I take the entry? At an area inside of triggers. There's my first target. KISS plan says go break even after you make $100. Absolutely nothing to lose. Let's see if they go to the second target. Ladies and gentlemen, this is your high probability trend trade. This is the trade, Byron, that when you learn this trade, you start reading indicators. You start recognizing advantages. But this is it happening right in front of you. Pretty cool, right? What is this, the S&P? This is textbook. And the KISS plan, guys, the KISS plan that I drop in this room every day is the most mechanical, emotionless way to ever manage this trade. When you get a little experience, you'll say, I don't want to be 2 ticks below a mid-band inside of triggers. I've already made money. I'm going to keep it above the reversal bar. I'm going to give it a little extra breathing room to see if it hits that next target. And I don't know if it's going to hit the next target. I don't know if it's going to come stop me out. But I've already made $100. I can risk $50. I can risk $25. Give myself a little extra breathing room to see if it goes down and grabs that second contract. That's the management, guys. Learning how to get paid, learning how to protect your investment, and believing that with these advantages in play, the market's more likely to go down than up. I think it's cool. Like, I get excited when I watch these patterns come to play. I get excited when I watch the market do this. And John says, if nothing says it will stop, it doesn't, 80% of the time. For the ES trade, Mark was within 1 point of 1-to-1. How close to the market reaches do you consider a termination condition? Great question. I'm going to give that a couple answers. And let me show you why. So I'm going to do it this way. So the first one, I'm going to talk about, Samuel, how fibs are born. So fibs are a result of thousands of calculations on every swing in the market. And then your software goes through and it sorts them and weighs them. And what happens is from thousands of calculations, you get that blue fib. So when I'm talking about Fibonacci, I'm talking about a couple ticks above, a couple ticks below. So does that make sense, Samuel? That's kind of the precursor to understanding how the other lines are made. When the market goes up and creates this divergence high, this is a precise 100% line in the sand at 61.59.50. If the market doesn't reach 61.59.50, that line has not been reached. These yellow 1-to-1s are 100% Fibonacci alternates based on one calculation, one move. And if it doesn't get hit exactly, that area technically is not hit. So a little bit of wiggle room on the fibs, their areas. These divergence highs, these yellow 1-to-1s, these are pretty exact numbers. These are based off of singular calculations. So for me, I want to see this get hit. I want to see that get hit. You're welcome. And Pete says he'll trail his stop. Guys, if I trailed my stop too tight here, I got taken out of this trade. Nothing says this market won't go down, right? Nothing says it's not more likely to go down than up. There's a little bouncy, but I don't care. I've already made money, guys. I've got nothing to lose. And every plan is different. John says room to target means price didn't hit the line within a couple ticks. Entry area to term, number of ticks, is greater than the target number 1 of ticks. That's math. So what John is saying, I don't know what you're saying, John. That felt like algebra. That just hurt my brain a little bit. Price didn't hit the line within a couple of ticks. Entry area to the termination, the number of ticks, is greater than target 1 number of ticks. Take it. John, are you saying if there's room to the target, enter? I don't. If it runs, you're still in? Some of you are saying, well, what if they go to that fib? Well, right now my plan says make $300 on the trade and wait for the next one. Let me see. Room is calculated from, oh yeah, 100%. So let me show you what John just did there, Sam. When you're calculating your target potential, I'm not looking at it from the 2 or 3 ticks that I have to get to the line. I'm gauging it from where I'm going to enter that market, and you can see how the distance to the target grows exponentially. And that's why the rules say trade a pullback to an area inside of triggers, because instead of having 2 or 3 ticks to those yellow 1-to-1s, I've got over $300 worth of profit to get there. Yeah, John, that is much easier. And that's one of the things, we talk about that a lot. And one of the pictures that shows up is exactly what John said. And we use this for an example because there's some objections that new users are inclined to give. One of them is saying, I don't have enough room to that pink line to take the trade. And then learning that potential grows exponentially from the area inside of triggers. Oh, you were thinking in code terms versus real world? Yeah, when you start using the greater than, it does it. Other things that new users are inclined to do is be fearful of the 1-to-1s up here, forgetting that terminations are defined here. Worrying about those small triggers down here when momentum is defined here. And there's a lot of things that you'll work through as you begin to trust the patterns. If third divergence is true, guys, that's a termination condition. If it doesn't happen, technically it's another trend trade, but we'll let this one play out with a break-even stop because that's what the KISS plan says. There we go. Third divergence in the same price range may terminate a trend. What a great exit condition. I don't feel bad about a $100 trade. And look at that. There's our pattern that says it's time to get out. I'm out break even. I got paid on it. And no matter what happens next, has absolutely no effect on me because I'm no longer in the trade. Pete's like, I told you to trail that stop. Dang it. Not doing it. That's your KISS plan, guys. That's your KISS plan. And these are recognizable patterns. These are patterns that repeat every day. John says not the ES, but there's a mid band. There is nothing. 3 divergences in the same price range on a large chart, and fibs hit on the small chart. This is your software screaming through a bullhorn. You're done going short, Mr. Novak. No more. Nice picture. Hey, Miss Claire. Now, how am I going to read this chart, Claire? How are you reading that chart? What is this, the S&P? All right. So Claire, do me a favor. Take your large chart and let me see what's happening on it. Because like this, I can't read it. I don't know where you are, what you're coming from. Would you do me that favor real quick? Could you take those same pictures with a little bit of large chart help? I can't see what it's saying. Here it looks like you have the one-to-ones. I'm not sure what's going on there, but your triggers have rolled. The market comes down, hits the zone, white bar prints, down bar for the confirmation. It creates the HVA line. And you're saying, do I wait for the pullback per the rule? So Claire, if you had a termination on the large chart, that's exactly what you would do. You would be looking for the pullback right here. You never got it in this particular trade. It just didn't give it to you. But absolutely, perfect read. It just didn't give the opportunity that you were looking for. And then looks like we're going down. Refresh charts. Yeah, so when you refresh the charts, Claire, market flow starts over, unfortunately. But that was it. If you had gotten a pullback that you were looking for, that would have been your short, exactly as you described it in this picture. John says, pull back to the mid band. Oh, well, I couldn't see her mid band. Yeah, I guess I could. I couldn't see it in there, but I see exactly what John's talking about. When you spread it out, it's a little easier to read. Large chart screaming down. There's your pullback to the mid band. There's your close on the correct side of the triggers. So Claire, you had a trend trade before the HVA trade set up. So you were right to think shorts. John's is a little easier for me to read. There's your pullback to the mid band. There's your close below the triggers. And it just catapults and it rockets down. Does that make sense, Claire? I couldn't see the mid band in your picture. That's why I missed it. I apologize. That's such an easier read. Spread it out a little bit. Make it easy to see. One of the cool things is I don't need all of this information to say, hey, I reached a zone. My trigger's rolled. There's your white bar. There's your confirmation bar. Didn't really get the trade there. But with this look, we're gonna look for more up than down. Nice stuff, Claire. Did that make sense? Steve, still trying to figure out why I can't read it. Tried to spread it out. When you say no give, it won't spread out for you. Okay, so click on your timestamps and go left and right. That should give you a little bit. If it won't do it on the large chart, it should with the price with the price bars over here, the price stamp, price line. I'm losing my words. And it won't do it for you at all. Try this. Right click and reset the chart view and give it one scroll back and one scroll up and then pull it down into view. And you can do the same thing on the small chart. Reset chart view. I do one scroll back, one scroll up, and then I center. See if that works for you. I think it makes it a little more readable. All right, Steve. The market's going up. You go up with it and get paid. Good job. Market's going up. You go up with it. You get paid. Nice job, Steve. Market's going down from a termination condition. You go down with it and get paid. Nice job, Steve. How easy is that to read? Everything says up, he goes up with it. Everything says down, he goes down with it. I mean, I can't oversimplify. You've done it. Great job, Steve. Nice trading. Odds favorable momentum. Pull back to the area inside of triggers. First target hit. Out break even. Absolutely beautiful, Joel. I should do stuff like that in class for you guys. Really nicely done. Price reaches the divergence high. How many triggers got through, right? How many triggers get through? None. It's not a clear path. Divergence says not only is it not a clear path, you're losing momentum, avoidable losses. Nicely done, John. Things that happen with new users sometimes. But Mark, there's 3 divergences in the same price range. It has to go up higher. But Mark, look at the strength in the triggers. It has to break the area. Guys, the market never has to do anything. That's where the checklist comes in, right? The checklist says, if you reach an area, count your triggers. None of them broke. It's probably not going up. You don't have to take the trade. Really nice read, John. Good job. I would dare say that's almost like a conservative looking for a high probability trend trade read. The guy that wrote the plan. And we're back to retesting. Just let it all line up, right? Back to retesting. Let it all line up. Right into a divergence high. No triggers through. But there's your trend trade to get to that termination. Odds favorable momentum. Nothing on the big chart. Pull back to the area inside of triggers. The only challenge with this one, guys, is this is NASDAQ. And those triggers may create a little bit of a support bounce. Let us know how that entry works. They may push up just a little bit higher based on that small chart immediate momentum. And it looks like they're trying. One of the things about trading the NASDAQ, guys, and this is one of the reasons I don't teach the NASDAQ, is your large chart on a NASDAQ is a 34.5, not a 13.2. Big difference. Your small chart is a 13.2. John, great entry. When the divergence prints, you're break even, not willing to give any of it back. Targets make sense. S&P pushed a little higher, finished the move down. Happens. Some days you got to clip it off 100 at a time, guys. Some days it's like an ATM. All right. No triggers through the termination, losing momentum. No triggers, losing momentum. All right, let's sit on our hands. What do you want to talk about, ladies and gentlemen? I'm going to mute. Leave it on you. All right, John, second higher divergence, took an exit, and he says down bar. I don't know. So, John, if I'm reading your charts, your large chart says, hey, you're losing momentum, the small triggers are up. Your small chart says you reached Fibonacci support, you got a second higher divergence, everything is pushing higher. Maybe giving yourself something to bounce off of, waiting for a confirmation bar, whatever makes you happy, whatever your plan says. I don't know what your rules say about that. And one of the things John Novak doesn't have on his large chart are the small chart areas. That was a perfect termination condition on the small chart, confirmed by second higher divergence. He may or may not want to trade back into that based on his large chart look. Can I hear? I don't know what that means. Guys, can you hear me? Give me a Y if you can hear me, please. Anybody, nobody? No sound at all for anybody? I'm talking right now. Nope, okay. All right, how about now? Can you hear me? Sorry, I had it muted. So Byron, sorry guys, that was 100% on me. Byron, I'm showing both TV and NinjaTrader. So for the last, John, is it 20 years or 8 years, or I'm not sure how long it's been. NinjaTrader has been the platform for the Nexgen software, and that was the best one. One of the challenges with NinjaTrader is it crashes from time to time, and it has a couple little issues here and there. TradingView is used by like 100 million people, and it's super stable. So John Novak wrote Next-Gen Indicators for TradingView. We took the time to build a plan for it, to create rules for trades the same way that we do on NinjaTrader. 2004, 2006 is when we started NinjaTrader. And there you go. There's John's reply, Byron. I'll read it out loud. TradingView instead of NinjaTrader after 2 decades of developing for NinjaTrader from the days of Raymond D. and John G. in 2004 until its 2025 acquisition by Kraken, we've experienced the bugs, crashes, and platform limitations firsthand. That's why we made a conscious decision to build our prop firm around TradingView and CQG Desktop as a backup, With over 100 million users, TradingView offers unmatched stability and accessibility. So, Byron, what you're seeing in this room is beginning to work towards TradingView for a lot of people that are making that change, but understanding that there's still a lot of people over here on NinjaTrader, and some people are just more comfortable with it. So depending on what you do, we've got options for both. And then fibs are next on the slate for TradingView, but it will take some programming time. And then, John, do you see Steve's question? CQG data feed through AMP comes with the Nexgen Pro Trader account, so he can cancel the TV feed, correct? As long as you're in an evaluation. Absolutely. Byron, did that answer your question? Hopefully we got you an answer that works there. And it's not about the results. It's not so much about the results, because the results can be found on both. NinjaTrader, we're using a dynamic Renko bar. TradingView, our plan revolves around minute bars, so they're different looks, and you may find opportunities at different times based on what you're looking at. The results will be up to you, reading your rules, following plan. And then John said he left his $7 going. I did the same thing, John. I left my $7 at $7. Range minute and ticks works great. Absolutely. Yeah, for $7, Steve, it feels like a good one in case you're not in that investment or in that spot. Junior, you put a question mark, brother. What was the question mark for? Help me out with that. So one of the things is just a question mark. You might be wondering about the duality of man. You might not understand the recipe you cooked last night. Help me out with more than just a question mark, and I'll get you the answers. All right, Miss Claire, let's see what you have here. That's better. So your large chart won't. Let's try this, Claire. Let me know if this works. Come down here and click, see where the settings wheel is? Whoops. Well, that was a mistake, but that's okay. Just above it, there's an A. If you click that A, it should center everything. And then you should be able to stretch and stretch. It's interesting that you're not getting the vertical. You could also try this. Let me see. I don't know. Mine works great. Any of my TradingView people have a fix for Claire? I don't know why it wouldn't let you stretch things out. It's the internal struggle between good and evil, Pete. Have you ever seen Full Metal Jacket? That's where I got that from, where he's got the peace symbol and he's a Marine. But Junior, if you want to elaborate just a little bit, man, I'll get you the answer that you need for sure. All right. I see. I see that you're posting in there. Okay, Junior, I got you. But you're private messaging me. Just took the Discord for Chart Prime and was waiting for them to ask me questions, but there was no option for me to ask him question. My question is, do I want to learn about those indicators or watch some video because they give a lot of important information? Talking about Chart Prime or talking about TradingView? We're going to get this. I'll work double. Here we go. Okay, I took the Chart Prime membership. I still want to learn those indicators. That's on my chart because I made money, but I'm losing money. But I'm taking a trade based on those indicators. There's something I'm doing wrong. And you ask one of the help hotline, they told me it's a Discord question that you need to ask them. He doesn't know. All right, so JR, if you're taking trades and losing and winning or whatever it is it a problem? Are you worried about a problem with your indicators, Or are you worried about a problem with being able to execute trades using the indicators? Because if you're taking trades and losing, post them in the room. Let's talk about them. I'll help you every step of the way. You won't be able to call Chart Prime and say, "Hey, what's wrong with my trading?" All they do is provide a tool. The same way Nexgen provides a tool. But what I do is I go through your trades. We talk about the rules. We look at the advantages. So post in the room for me. Miss Jen, Mark, want to hear something lucky? I apparently entered a short in the ES. God knows how. Did not mean to. Just check the ES chart. You were looking at crude oil and it was plus 300. Quickly exited. And that was that. Jen, good things happen to good people, right? Good things happen to good people. So, Junior, what I really need to see to be able to give you the absolute best amount of help is show me the trades that aren't working. Let's talk about them. Look at that entry. I swear I did not do that. High tick. I mean, that's pretty awesome. That's the wrong one. I was like, that's a great entry. Wrong picture. All right, there's the new one. And then Claire, did you see that? I think Pete said try to delete your chart and maybe just rebuild and see if that helps. All right, so Miss Jen, 3 divergences. That's a weird looking entry. I don't know what that means, but I mean that is awesome entry, right? And you were able to make money on it. Not if it's crass. It was not you. That's worrisome. So what is that? Is that on? I don't know. That's interesting because I've never seen that sort of wording on there. Like normally it's just entry in the price, right? That's floating apex copier crap. There you go. John's seen it before. You're going to try to rebuild, Claire? All right. John from here. Not here. So John gets in on the way down. Doesn't fight the small triggers. Waits for confirmation. Takes his trade. Nice trade, John. Waited for the midband, right? There's the gap theory. John trades the gap theory off the midband. Nicely done, son. Lost a bit. Divergence ended it. Right on. That happens. All right, guys. For those of you that are on TradingView, for those of you that are following that, let me give you the plan. Let me give you the TradingView plan, guys. These are 3 trades, how you use the charts, what you're using the charts for, where you find your turning points, your problems, what you're looking for over on the small chart. I have no idea, John. Have no idea why that's a 30-minute chart. Thank you, though. Now I'm worried about this chart. That's a 1 minute. I don't know. That was weird. Good eye. John used to teach the room. Yeah, good termination right now, huh? You see, oh, Jen, now you know where I get it. It's genetic. We see everything except our own charts, apparently. We are great. Just ask us. Oh, awesome. Byron, we are so glad to have you with us, man. Come back tomorrow. Keep asking questions. Get comfortable posting pictures, and we'll focus on basics. We'll work it into more. The more you talk, man, the more you talk, the more you're going to get out of this classroom, without a doubt. So, welcome to Nexgen. So glad to have you. John Novak is long, 2248, but it's into that zone. Pull back to an HVA in a zone. Here's a great lesson for you. For you guys doing TradingView, hits the HVA in the zone against the triggers, hits the HVA against the triggers, hits the HVA. That's where you finally get a close above the triggers. And once the triggers roll, it's about the same price and off it goes. Seeing both market flow and divergence at the same time, Claire. So when you say having to refresh, what are you doing to refresh? Are you taking the indicator off and putting it back on? I don't remember how to do that, John. Log off and on? John, I don't remember how to do that. Claire, let me think. Let me think. John wants me to get those on top. I don't know how I just did it, but it did it. There you go, John. I find the dots distracting, personally. I don't use them for anything. So Claire, you're not getting divergence and market flow at the same time. Is it possible that there's not divergence printing? Here, let me take divergence off and let me put divergence back on, because every time you re-up your chart, it starts market flow over. Click on the HVA. Visual order, bring to front. Thank you. Why though, John? Why do you like those dots up front? Isn't it funny? I'm teaching a class. They mean something. For sure. But they don't mean anything in my plan. I don't use the volume within the bars, right? My plan says if I have a good bottom and I pull back to an HVA line, go cat go. Doesn't mention the dots, stranded sellers, anything like that. That's an advanced usage of market flow. Then everybody can get there, right? HVA to HVA is target money. I love it. But I don't need to see these sellers in there to make me know that I'm not going long, right? I need to close on the correct side, then I give it a shot. So good stuff. Terminations holding. You like stranded sellers at lows? I like it. So what John's saying is that when he gets a low in the market, he loves a stranded seller, meaning that he's got one of these hanging pink dots at the very bottom of a big old bar, and it just says, hey, the sellers tried and failed. The sellers tried and failed. The sellers tried and failed. John uses that information to say, I'm looking for a long trade, and I can visually see the sellers not getting the job done. Is that right, John? Which makes you even happier about taking this long trade with a close above the triggers right at the zone in the HVA because of the strong bottom? It's a warm fuzzies. This is what happens. I just said all that. This is what happens when brothers talk in the same room. Use it at the right spot, not everywhere. That's what I just said. Gives you warm fuzzies. I'm all about it. So for you guys that don't know, John Novak is very left-brained. He is analytical and probably borderline genius. And he sees things mechanically. The same way he tried to tell you guys to gauge your room to targets in code. I'm like, oh, we got all the colors of the rainbow here. What a happy little look. Guys, that's about it for today. How'd we do?